Okay, then there's an exercise and a problem that we need to look at yet. So the first one is number 17, and it's basically asking you to do an entire cash flow statement in direct method. So like I said earlier in my videos, the very first thing you would do, you see there's two columns again of amounts. You need to put in a third column and calculate the change in all of those accounts. So you would calculate those changes, look at the cheat sheet, figure out is it an add or a subtraction, and then we could look at this additional information. So they're telling you that the land was sold, equipment was acquired with cash, there were no disposals. So if there's no disposals, we don't have to worry about calculating net book value and then is there a gain or a loss. Common stock was issued for cash. $62 credit to retained earnings for net income, and then there was a debit for dividends. So if you look at this cash flow statement, and we look through here and you say, okay, well, the very first thing is net income. Well, they gave us that amount, right, in letter E. Depreciation. Uh-oh, I don't think I ever read anything about a depreciation. But if you look at there were no disposals. Okay, there were no disposals. So look at the accumulated depreciation. The accumulated depreciation changed by 26. So we don't have to look at the depreciation expense. We can look at the accumulated. It said that the land was sold for $120. Well, $120. So in this case, there must have been a gain. So if we had $330 and it dropped to $250, okay, so with your calculator, $330 minus $250, it went down by 80. Sold for $120. So that means there's a gain. Then we look at all of the changes in our current assets and current liabilities. And in this case, there is AR, inventory, and AP. The rest of the changes here that we're going to record are either in the investing section or the financing. So again, we got $120 for the land. We also noted that equipment was acquired. So if you look at the equipment account, it went from $175 to $205. So that's an acquire of $30. The net is $90. Financing. It said here that we issued stock with cash. So you look at your stock account, and it went from $80 to $125. Common stock went from $80 to $125. The APIC account went from $70 to $85. So when you look at both of those accounts, in summation, it increased by $60. It also says here, dividends, the retained earnings account was debited for $24 for dividends. But look at the dividends payable account. Beginning of the year, it was 0. At the end of the year, it was 5. At the end of the year, it was 5. So our liability account went from 0 to 5. Okay, so in this case, there was $24 debited to dividends. Well, of that $24, 5 of it wasn't yet paid. So we will show a $19 reduction for cash paid. Of the entire declaration of $24, we see that there was 5 still in the dividends payable account at the end of the year. If you actually went to your cash account and looked at the difference between 14 and 183, it's a change of 169 right there. 169, which is the summation of all 3 of the sections: operating, investing, and financing. So that change plus the beginning of the year will be our end of the year balance. That is an entire cash flow statement in direct method. Problem 1A is exactly the same layout. And if you look at the problem, there's the two columns again. I would challenge you now to add that third column. And then you could look through this additional information. And from that, you will be able to do exactly the same thing that we did with exercise 17. The only difference in this one is right here. Remember, the last problem had a declaration of 24 of dividends, and there was still 5 in the dividends payable account. In this one, if you look at the dividends payable account, it had a beginning balance of 25, and it has an end of the year balance of 30. So we look at what did we declare, 90, plus the 25 that we had in the payable account, certainly would have been paid by now, but there's 30 that's sitting in there that we haven't paid. So our net dividends paid is $85,000. It's really the only difference between these two problems. I would try to solve this one first on your own on a separate sheet of paper, and then come back and look at this and see how did you do. It's virtually the same problem that we did, just different amounts. That takes care of chapter 13. Once again, I would challenge you to reread this chapter, go through these exercises several times to understand what we're doing and what section is an add back or a subtraction. Know that cheat sheet like the back of your hand. When you're on Cengage, it's much more important than understanding why it is the way it is versus just trying to get 100%. You can take them as many times as you need to in those exercises, but it's much more important to understand why and understand the exercises. This is not a chapter to wait till the very end and try to get through it. This is a very involved, difficult chapter, so take your time. And that's it for chapter 13. Thank you.